Stephen Mark Ryan just gave a warning to not reflexively dismiss the potential of Tesla. I'll dive right into that after going through Gary Black calling out some big institutional investors. So let's go through all of today's Tesla stock news. There is huge pressure on institutional portfolio managers who are overweight Tesla to reduce their Tesla stock positions in the face of massive year-to-date underperformance. I think by Tesla standards, minus 26%, that's not massive. Most portfolio managers are sheep. They see Tesla earnings estimates going down and they sell, which is also often why when the stock goes up, price targets go up. The stock goes down, price targets go down. It would be really helpful if these price targets could move before the stock does, but it's always the opposite. The absence of Tesla's forward volume guidance fuels uncertainty, even though Q4 auto gross margins beat. No more price cuts would help, Gary says. I personally greatly enjoy seeing Gary Black calling out other portfolio managers. And after all, when it comes to gross margins, Tesla did beat these expectations. There is a lot of talk about this chart here. This is Tesla's cost of goods sold per vehicle. We want these to go down, and they are going down, which is great. However, look at what Tesla says here. Cost of goods sold per vehicle declined sequentially to slightly above 36,000. Even as we approach the natural limit of cost down of our existing vehicle lineup, our team continues to focus on further cost reduction across all points of production, from raw materials to final delivery. Tesla itself is admitting that there's only so much you can do, but they still find new things to do to further reduce costs of goods sold. But the supply chain expert Jeff says that these hunks of metal plus thousands of components still cost $36,300. Blended cost reduction efforts relative to product cycle are far from over. If you have ever done this before, you would know. Not easy, but also in capable hands based on past performance. This is very important for Tesla's profit margins, but also for making vehicles more affordable. Jeff explains why he thinks cost of goods sold will keep going down. Volumes are still growing, trims are not meaningfully growing, complexity is stable, so leverage is increasing. Number two, there's going to be new product leverage. Tesla will forward lever the $25,000 model plus Optimus to achieve cost of goods sold results on existing products today. They already have the highest volume SKU, which simply means a unique part or a unique item or product. So those suppliers get killed if they don't get designed into the next generation platforms, and new suppliers will shoot their shot. These suppliers are scratching and clawing, competing on multiple vectors to win this business. Tesla is fair, but Tesla holds all of the cards. This is how this works. Name another OEM that will produce a single model that would replace the Model Y volume. There's no one. Number three, the culture and the people. Starting at the top of the company, the culture is to innovate on cost. Teams are expected to band together cross-functionally to get results on cost, eliminate processes, parts, eliminate steps. The engineering leadership has their own event-driven lists. The supply chain leadership are skilled and understand how to leverage their position. Most importantly, they all work as one combined unit on cost, all the way back and up to Franz's work on design, and certainly supported by Elon Musk, the CEO, who created this culture. This is an advantage most companies simply do not have, and the results show. Look at Tesla EV profitability versus anyone else. But also, let's remember what the CFO of Tesla said. I would want to caution to not project the previous cost reduction at the same pace completely in the future, because with our current platform, there are limitations. But also, Jeff points out that he has actually done this work at scale, and every company in the world drives quarterly cost of goods sold all the way to end of life, and Tesla is nowhere near fully optimized. And here's the warning from Stephen Mark Ryan, warning us about how big the Tesla stock opportunity actually really is. I think this is quite timely given how many people are a bit disturbed by what they read about Tesla stock. So I think having that long-term perspective during a time like this is incredibly valuable. Tesla has built a foundation to pursue a series of opportunities, each an order of magnitude greater than the last. Here's the approximate scale of Tesla's future opportunities. He says the next-gen platform is roughly maybe 10 times the size of the current generation, potentially. Autonomy would be 10 times the size of the next-gen platform, and Optimus would be 10 times the autonomy. I think potentially Optimus could be much more than 10 times the autonomy, because the numbers just get really spooky when you start thinking about it. Haters will hate, and those with a short-term perspective who cannot think over multiple decades will dismiss this post as the outrageous delusions of a Tesla cultist. Instead, take the time to deeply understand each of these opportunities, how Tesla is positioned to pursue them, and importantly, who else is equally well positioned or could become equally well positioned, if that is possible, and what it would take, Tesla's odds of success, the scale of the opportunities, the worst case, best case, and a moderate case. Draw your own conclusions, but do not reflexively dismiss the potential here without first doing the thinking, even if it hurts. You know, I have a theory that long-term Tesla stock bears that have been bearish about Tesla stock for years, that they never have headaches because they never think. I have a pretty good feeling that my theory could have some potential. Gary gave a bit of an update about his Tesla valuation model. FSD makes up 9% of his projected Tesla earnings in the year 2030. And speaking of FSD, ARK Invest will release their updated Tesla stock price target in a few months. It will be a 2028 Tesla stock price target. There are so many things that ARK Invest is excited about, says Tasha. The focus on demand and production in the short term is really just that. It's short-term focus, says Tasha. Gary pointed out yesterday that if Tesla does not cut prices yesterday night, which is when Tesla usually cuts prices, Tesla stock could rebound because with the $7,500 instant rebate, Model Y rear-wheel drive prices start at $36,500. Elon replied to Warren. People who think Elon was negative about Dojo do not speak Elon low probability of success. He said that about SpaceX and Tesla as stars. The important detail is they are already working on versions 1.5, 2, and 3. And Elon says, my estimate of the probability of success at the beginning of both Tesla and SpaceX was less than 10%. The reason people telling me we would probably fail didn't dissuade me was that I already agreed with them. Elon may not be helping himself with recruiting new talent by saying that the probability of success is not very high, but it does help to keep expectations in check. This was a pretty good post from Gary. Let's be honest, most Wall Street analysts are used to being spoon-fed, and most CEOs hate providing guidance. They do it because their competitors do it. Tesla not providing guidance just means Wall Street has to do its own research, which is how it should be anyway, but you know, Wall Street is a bit lazy. Elon Musk is wired differently than most CEOs. Tesla's mission is to accelerate the world's transition to sustainable energy. Providing Wall Street guidance does not further that mission in any way, other than maybe it could possibly prop up the stock in the short term. Tesla's Q4 results were actually better than Wall Street expected, stripping out accounting adjustments and non-cash tax rate changes going forward. Gross margins, excluding credits, grew quarter over quarter to 17.2% as auto COGS per unit fell 8.5% year over year, supporting the thesis that auto gross margins bottomed in Q3 at 16.3%. What we saw Wednesday night was Elon saying, grow food yourself. Anyway, my take on this is, with Tesla, you always are on the extreme of, oh, everything is going great right now, or everything's terrible. There's almost no middle with this company, really. Things are never just, it's just another day, it's boring. Unless another day is, oh, the stock just dropped 10% or the stock just went up 10% in a day. Sort of multiple days, not exactly in a row, but you remember in June we had a record 13-day winning streak, and there was so much hype around Tesla at that time. Those days will inevitably, I believe, come back. This is wonderful. See this map? Now, this is actually using a static map, and this is in China only. I really want this in the US because you will never miss any turns. You will know exactly where to go. The current maps, I think, are decent, but they can certainly be improved if you need to make a turn, let's say to the right, and there's another road that's very close. Sometimes it's a bit confusing which one you should take, but with this, yeah, that would never be confusing. I would love to see this feature in North America. I would never use Google Maps ever again if my Tesla had maps like that. I typically use Tesla maps if I need to use navigation, but occasionally, if I know the drive is going to be very, very difficult, I will also run Google Maps at the same time. I like to run Google Maps with the sound on, but also run Tesla maps, but with the sound off. And then I just listen to what Google Maps is telling me. Here's Tesla's annual research and development spend. In 2023, Apple spent $29 billion on R&D, a sum greater than the total amount Tesla has spent on R&D in the company's history. And yet, Apple has no EV yet, even though they have been working on it now for years, specifically for a decade now. If you ever feel like a failure, just remember that Apple has been working on an EV for 10 years and it has nothing really to show for it. So Tesla overall is extremely efficient with its research and development spending. Although another way to look at it is Elon drove a lot of that research and development himself. So we are sort of paying for that by giving money to Elon in terms of stock compensation. But that only happened because the stock went up so much. So really, it was free to shareholders. Because if it wouldn't have worked, Elon would not have been paid. And I think that compensation package did motivate Elon. Elon actually retweeted this video from CNN that Sawyer posted. Pepsi, in a new video, said these semi-trucks from Tesla can run up to 500 miles on a single charge in a single day. So between two drivers, one truck, and 24 hours, we were able to run 1,076 miles on a single electric truck. Believe it or not, there are still many people that just watch the mainstream media, so it took them so many months to cover this story. This is not really news because it happened back in September. And I think the same can be said about many investors. Many still have not realized the long-term Tesla stock potential. But many of them will come flooding into the stock once the hype comes back. Dave Lee shared some of his thoughts. Tesla's operating goal in 2023 was to grow volumes and meet their 1.8 million unit target, even if they had to cut prices and hurt their gross margins. Results were mixed. Yes, they hit their unit target, but they hurt their gross operating margins, and now investors are left with a lot of questions, and Dave Lee did post a lot of questions here. Dave has some constructive thoughts for 2024. I think management should target 20% gross margins for 2024, and I think they should not rely on price cuts to drive volume this year, or else we will see a further hit to gross and operating margins, which could cause a lot more investors to walk. If Tesla wants to increase volume for Model 3 and Y, then they should find creative and effective ways to increase that demand via awareness, outreach, and marketing. There's a lot of perception that needs to change to grow the EV market even faster, and to change that perception should be part of the mission that Tesla undertakes. On earnings, Tesla management could have said, we pushed margins lower than we should have through price cuts in an effort to drive volume and meet our unit goals for 2023. But we think that was a mistake in hindsight. In 2024, we are focusing on growing, but with a higher priority on increasing our gross margins to 20% by the end of the year. And we really shouldn't have a mature product with less than 20% gross margins. We are going to double down on growing our market via awareness campaigns so that we don't need to do price cuts that take our gross margin under 20%. And our next-gen low-cost vehicle will have gross margins of at least 20% when fully ramped. Under 20% gross margins aren't acceptable at Tesla. I love the long-term product potential Tesla is developing an Optimus, FSD, 4680 batteries, Tesla Energy, and more. I just think there's room for improvements with how they are managing and operating the business in 2023 and 2024. I think Elon is still largely hanging onto this thought. I think there's something to be said about the uncertainty of FSD's completion. If V12 ends up changing the game and can operate at level 4, then everything goes out the window. In the long term, I believe that Tesla will figure out advertising, and when that happens, I think the stock will probably rally by quite a bit. But it appears to me that Elon may want to focus on maximizing volume from additional price cuts, fully exhaust that strategy before going all in with advertising. Bradford says that no Audi A4, Mercedes C-Class, or BMW 3 Series should sell for more money than a Model 3. Until this is the case, Tesla is not done raising awareness among customers. Teslas aren't just economically better, they have better performance, better safety, better technology, and better convenience. But as someone who has friends that have BMW 3s and a Mercedes A-Class, most of them like the interiors of these vehicles quite a bit more. But the refreshed Model 3, I think, maybe changed that a little bit. So Bradford is not really wrong here in terms of the car being clearly better. But Tesla wants to be a mass manufacturer, and Audi, BMW, these are not exactly mass market vehicles. Elon basically agreed with Kevin, saying in the near term, Tesla stock is merely a call option on interest rates. If interest rates go down, Tesla stock goes up. In the long term, Tesla stock is a call option on the future. And I believe the future is bright, and Tesla will be a part of our bright future. Here's some good news. There's no recall in Norway after Tesla investigation because it just wasn't a big enough deal. Remember that big story from Reuters saying that Tesla is basically scamming customers because Tesla supposedly knew that it had faulty parts in the vehicles and it refused to do warranty work on these parts? Anyway, this seems to pretty much conclude that story. Chicken Genius just updated his price targets. Everything is $69, including Tesla stock. Tesla stock under $100, I think, is very unlikely. And if it drops that low, I will be buying. This morning I woke up, I checked the news, and I see this all over the news. Tesla to recall 200,000 vehicles in the US to fix rear view glitch. I was like, huh? So this is an actual recall? No, it's just a software update. One publication, USA Today, actually did put that in the headline, so a big shout out goes to them. This happened pretty much a month ago. What happened was Tesla released a new update, and that new update made the backup camera not work properly. So then Tesla immediately did another update, which then fixed the problem, which is now reported in the news a month later. Gary sees a few positive aspects of Tesla not providing guidance for 2024, and that is that Tesla will not have to keep cutting prices to meet their guidance for 2024 because there's no guidance. As the year progresses, Tesla can offer inventory discounts as needed or buy down auto loan rates, both which have far less negative impacts on Tesla's valuation than price cuts. And currently, Wall Street expects Tesla to deliver 2.1 million vehicles, which is roughly 17% year-over-year growth. I really like this visualization from the Motley Fool. It really helps you understand where everything is coming from in a very easy way. For example, it makes it really easy to understand how big Tesla's energy business currently is. You can see that it's actually really tiny compared to automotive revenue. Former Top Gear presenter James May just bought a new Tesla Model 3. He sold his older Model S. He has about 6 million followers across all social sites, so this is good. Now, if Tesla decides to do more price cuts later this year, we will see a lot more headlines like this one. Polestar announces significant job cuts amid market challenges. Porsche has unveiled their first ever all-electric SUV, the Macan EV. The pricing starts at $80,000, so it's definitely not a threat to the Model Y, it's just too expensive. The car can go up to 380 miles, and it does have rear-wheel steering. This is quite a headline from Forbes. Omar says that this possibly indicates peak negativity. Elon responded to this as well. Forbes says there are many reasons to dump Tesla stock, the most important of which are Tesla's weak customer value proposition and CEO Elon Musk's urge to focus more time on AI and robotics, the things that will have an incredibly large impact on Tesla's future. Elon says Forbes is desperate for attention as they are dying. That's it for today's news. I want to share one thing that I'm about to try. If you're looking for a Valentine's present for your wife or your mom or your daughter, you might steal my idea. I'm gonna buy this mask as a present. Basically, it's an LED mask. It's clinically proven to reduce wrinkles as well as breakouts. The way it works is you put it on for 3 minutes. Red light reduces wrinkles and blue light reduces breakouts substantially. I actually spent a few hours researching this and it's clinically proven. I thought this was all a sham, but no, there are actual clinical studies that have proven that red light and blue light work. And because I only buy good presents, I looked at all of the other LED masks, and this one seems to be by far the best one. It is the most comfortable one. It is battery powered, which means there are no wires. You can just put it on and do all other stuff. And doctors recommend it because red light and blue light therapies have been proven to work. And if you have anyone in your family, especially a teenager suffering from breakouts, this might really help. And if you want to support this channel, you may click on my link down below and purchase the mask right now. That's it for this video. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.